Hi, welcome back. So in all of our previous lectures, we saw uh, quite a lot of things, as in what are indices, what do they mean, why are they important, what types of indices are there, what asset classes can have indices, the tradability characteristic of indices, as in are all indices tradable or not, and some examples of unusual indices, and a couple of other things as well. So we saw quite a lot of material related to indices, and now we are going to be looking at Forex indices, the reason why most of you are probably here. So let's address the elephant in the room, the Forex indices, and let's take a look at what they are and where can you find them and how to analyze using them, etc., etc. Moving on. So what are Forex indices? Forex indices, which are currency groups that track the performance of currencies against other currencies. So you have the US dollar index and the euro index and stuff like that. Okay, so they are groups of currencies put together in a certain group to measure their performance against other currencies. Okay, are Forex indices tradable? Only the US dollar index is tradable. Other indices are just indices used to make informed trading decisions. So they are only for representational purposes. Okay. Where can we find Forex indices? So there's this website, theindices.com. It's a site that has charts showing several indices from USD, Euro, Japanese yen, British pound, Australian dollar, New Zealand dollar, Swiss franc, Canadian dollar, etc. Okay. I have attached a Word document with the link as well. So it's nothing but theindices.com. You can directly go over there, or you can click on it from the Word document that I've attached on the course's dashboard. Okay, so let's take a look as to what the website is and how do you trade using Forex indices. So I'm now at theindices.com. And I have a few steps basically given out for your convenience. So over here I have the Australian dollar index opened over here, the daily chart. Okay, and I have done that for all the indices, all the major 8 index groups, basically the Australian dollar, Canadian dollar, the Swiss franc, Euro index, GBP index, Japanese yen, New Zealand dollar, US dollar, and finally in the end I have the currency pair open. So I'll tell you step by step on how to basically trade with using these Forex indices. Okay, and let's take a look. So what I've done is I've opened up all the 8 pairs. Of course there are more pairs. So if you see, there are several indices over here, right from Arab Emirate Dirham Index to South African Rand Index. Okay, so I believe there are 20 plus indices over here. Okay, so I have opened up all these indices. Okay, so as you can see, the Australian dollar index, what does it really mean? It's nothing but a collection of Australian dollar pairs against basically several other currencies. So it has Australian dollar and Euro AUD, GBP AUD, etc., etc. So the coalition, the compilation of all these pairs put together in this group over here shows how the Australian dollar has fared in recent days or recent months or recent weeks. So if you look at it over here from 9th September to the 21st of September, Australian dollar has significantly gained in strength. Okay, so Australian dollar index rising from year to year basically tells you that it has become powerful against other currency groups. Okay, so if you take a look at say Australian dollar, US dollar. Okay, so from the 9th to the 21st, I believe, see over here you can basically see that it has actually gained in strength. Similarly, if you check out Australian dollar, euro, euro. Over there also you would probably be able to see that from here euro has fallen against Australian dollar, right? So what that says is that Australian dollar gained in strength while euro lost its strength against the Australian dollar. Any currency pair that you open up with Australian dollar in itself may show you that result. Okay, again, AUD CHF, it has gained in strength. Okay, now the index which I showed you showed tremendous strength. So from 94 to 98. So that's a rise of 4 points, which in percentage terms would be a little more than 4%, around 4.5%, I believe, 4.5, 5%, I guess. So similar increases could be seen across various currency pairs. Okay, so what does all this basically mean for your trading purposes? So what usually happens is sometimes certain currency pairs, they don't honor support resistance levels, or they don't honor certain indicator analysis, like for example Bollinger Bands or moving averages or something like that. And you always find yourself wondering, why did that not happen? Okay, and this is the reason why, because currencies, they move in strength. Basically, they lose or gain their strength depending on the strength of other currency pairs at the same time. Okay, so if US dollar and Australian dollar are gaining in strength at the same time, what will happen to Australian dollar US dollar, the AUD USD pair? What will happen to that? They will basically go in a range bound fashion, because it will be a tug of war between the two pairs. Both have to show that both are gaining in strength, so it will be in a range. Okay, this is what will happen if both the pairs are gaining in strength or losing their strength. They will follow a certain range. But if a currency pair is trending, whether upwards or downwards, then the pairs of that currency group with other currency groups will also start seeing the same trend immediately, or over the next couple of days, or over the next couple of weeks, or something like that. So it gives you an excellent bird's eye view of what is happening with that currency group. Okay, so for example, here I marked out a support level for this date, basically around this date, that November 20th. Okay, for the Australian dollar group. So it fell from 17th November to the 20th November, around this point. So you want to know what is going to happen around this point. Okay, because it has reached its support level. So over here, as you can see, the index has basically risen once it fell at this point. So this could be termed as a good support level. I've even put in a line over here, as you can see. There's a second line, the support line. Okay, so I've even put that line over there. So I want to see whether there is any trading opportunity over here, and whether you can basically initiate any trade with any other currency group to basically make a profitable trade. So what I do is I see that, okay, this is at a support level for Australian dollar group. So I check out the other groups as well. So I'm moving on to the Canadian dollar group, Canadian dollar index, and over there I'm seeing that it's at the same level. So we don't want that basically to be at the same level. Why? Because like I said, it may be in a range bound situation. Okay, so not always will range bound situations be profitable or loss making, but I kind of like to look at possibilities where both are at opposite levels. So one is at a support level and one is at a resistance level. So movement in that pair is guaranteed to happen in the coming future. Okay, so over here both are again at their support levels. As you can see, here is the support level for the Canadian dollar group, Canadian dollar index. So I will just move on. I don't want that. I'm looking over here as well, the 20th November line. So over here, it's a bit of a dirty area. So consolidation is going on with the Swiss franc. Okay. The euro index, again, there's some consolidation happening over here. Okay. So I don't like this. I don't like to see such consolidation happening as well. There has to be some clear-cut trending zones like these zones over here, right? So I'm moving on. Again, I see at the same region. Okay. So this again is at the support level over here, as you can see. Okay. So I don't like seeing that as well. I'm moving on. Again, there's some consolidation happening in the big picture over here with the Japanese yen index. And there is some support level over here, but I don't want support level. I want resistance level. Okay. So this is the New Zealand dollar index. Now we are talking. So now over here, I see that it's hit some resistance over here. So if I zoom out, you can see that there is clear resistance over here. I put in a horizontal line over here for your viewing convenience as well. So as you can see, there is resistance over here, and Australian dollar is at the support level. So Australian AUD NZD is one of the toughest pairs to trade because they mostly are range bound, and movements in them happen rarely. If they happen, like they give you some good returns, but it's kind of like I don't trade AUD NZD much, but if I see some opportunity like this one, I do like getting my trades in. So we have seen that NZD is at its resistance level, and AUD index is at the support level. So what I do is, after opening 8 windows for the 8 major currency groups, I open a 9th window which has the currency pair trading over there. So over here, as you can see, this, let me just put a horizontal line over here for your convenience. Horizontal line over here. Yeah. So here we are. Okay. So I put in a horizontal line. This over here could have been interpreted as a support level by several people, but they would have been wrong, right? As you can see, the AUD NZD fell further below that, okay, and it ended up settling over here. Why would you ask it end up settling over here? There is no benchmark, there is no level over here for it to be settling around. So why would it still settle over here, right? This is the 28th of November point, which we spotted out from our index, the Australian dollar index and the New Zealand dollar index, right? So why would it bounce from here? Why would you ask? It is because of these levels, this level and this level. So once it basically hits those support and resistance levels respectively in the Australian dollar index and the New Zealand dollar index, it showed a bounce, and it showed a bounce of going from year to year. Like, as you can see, the movement isn't much. Australian dollar index, AUD NZD pair, it does not give you good movements, okay? It does not give you big movements, but when it gives you some movements, they make good money, okay? That's why I kind of like to avoid trading this pair. But I chose this pair to show you because it is one of the toughest pairs to trade in. And this basically will give you an idea of what stopped the slide of the pair from year to year, giving it a temporary bounce back and then falling down to another low. Okay, so this is the reason why it bounced from here and hit the level over here, because of the levels marked over here. You can do this for all other time frames. This website has several other time frames as well, but I like to keep the time frames to a minimum of 1 hour and going up to, say, 1 week or even 1 month sometimes, because those trades, the smaller time frames, they have a lot of volatility going on. So it sometimes just makes your analysis not go in the way you must have decided to. Or the longer time frames, they take some time to develop, during which you may miss out on other opportunities. Okay, So I kind of like to keep it at the around 1 day time frame. Okay, this is the website. As you can see, it has its own forums and some brief introduction of the website. So this is what you can see over here. I have some steps noted down for you, which I'll basically show you once we go back to our lecture presentation, which is right now. So back to the lecture slides from that website. So trading with Forex indices. Open all indices in one time frame. Like I said, you compare apples to apples and not apples to oranges. So you open all indices in one time frame, okay? Because you want to analyze one time frame, the movement of all indices in one time frame. So you open all charts of all indices in one time frame for comparison, like I showed you. Then you compare indices for your analysis. You compare different indices for your analysis using your own methods. The simplest is the support and resistance analysis, which I showed to you, using the Australian dollar index and the New Zealand dollar index. And you check to see if the pair of two indices is at critical level. Okay. If you compare Australian dollar and USD indices and see that both are at the support or resistance levels, and also see that Australian dollar, US dollar is at such levels, then there may be a trading opportunity. Okay. Like I showed you with the Australian dollar thing. Okay. Moving on, I have the best time frames for you to be trading in. 4 hourly charts, they have a minimum of 4 hourly charts. If you look at minimum of 4 hourly charts, it basically helps you filter out the noise and weed out unnecessary volatility. Like I said, smaller time frames have a lot of volatility, but if you look at the 4-hour time frame, the volatility is usually smoothed out, it's ironed out, so your analysis can basically be correct. Okay, daily charts are very powerful. They give you big trends and can be spotted through this time frame. Big trends, basically, they can definitely be spotted through the daily charts time frame. 1 hour charts to make small trades and grab a few pips on an intraday basis. Any smaller time frame and the analysis may go wrong because of unnecessary volatility. So what I've seen also on the website, theindices.com, is they also have put it in the instructions over there, is that some charts take time to load. For example, the 12-hourly chart, okay, or the smaller time frames charts, because of a lot of calculations going on in the back end. Okay, so I would recommend you to use at least 1 hour or 4-hour charts for your trading analysis, and not the smaller time frames, because one, if they take some time to load, you may miss out on the opportunities. I can understand where they are coming from as well, because there probably may be a lot of pairs that are there in the background, and there may be a lot of competition going on in the background. Okay, and also I wouldn't want you to face any unnecessary volatility while trading, so might as well just go in for, the best would be to have a minimum of 4-hour time frames. 4-hour daily charts are very good to look at, okay, and do your analysis based on them. And if you do plan to go for the smaller time frames, then ensure that you don't go for really big trades, but you just make small trades and take out a few pips every now and then, make a profit of few pips every now and then on an intraday basis. Okay, so I hope this has basically helped you. I want you to be looking at these charts on a regular basis. Be active in the forum section of the website. And I will see you in the next lecture where I'll be talking a bit more about this method and what more could be done. All right, I'll see you then. Bye-bye.